Yes, it's a pleasure to be here, Jumana. Thank you very much for having me. So Cordoba, we're an investment advisor based in New York. We advise on well over $1 billion for family offices and institutions across the world, with a particular focus or footprint in the Middle East. So our approach is predicated on fiduciary independence, avoidance of conflicts, and disciplined investing, which focuses on allocation, cost compression, and capturing long-term themes. So we really try to act as an unbiased investment advisor to make our clients money. We're not in the business of enriching banks and managers, but rather trying to preserve and grow their wealth. We then look to augment our investing on the liquid side with some differentiated private deals and principal investing.
So thank you for giving us an overview. I would say, what does that mean in terms of putting it to practice this year? One of the big themes for the market has been this hype around artificial intelligence. And even though at the beginning of the year, people were sort of lukewarm on tech stocks, over the last couple of months, that has become a major theme for the investment community. Are Arab funds and institutions also get involved in that space as well?
Well, 100%. I mean, we started the year believing that the economy would be more resilient than the market was perhaps pricing. So we were contrarian. We entered the year really overweight growth, tech, and part of the reason was due to the pro-cyclical fiscal policy by the U.S. government. They were spending a lot. There was a lot of money still washing around in the system, and the big tech companies especially were poised to benefit from that. This year, with respect to our investors and Arab investors from the region, there's been a huge swing trade, if you will, that's happened in the last year and a half. Swing trade is basically they're selling something that's high to recycle those profits into something that's low. So this recent energy reflation or boom has really motivated sovereign wealth funds, family offices from the region to engage in a new kind of deal making or investing. One which is more sophisticated, targeted, and and focused on disruptive growth sectors within tech, renewables, hospitality, et cetera. I mean, Jumana, just as a reminder, I mean, earlier this year, Aramco reported $161 billion profit, right? I mean, this is the largest annual profit ever recorded by an oil and gas company or a company, in general. And this was fueled by soaring energy prices. And this money has mostly been redirected. The Saudi Aramco is still 90% owned by the Saudi government. So most of this profit has been located to their sovereign wealth funds and in course, gone into sectors such as tech, growth equity, which have been beaten down the last year and a half. So into the future, this will reap really handsome dividends.
Rami, good morning. Juliana here. Of course, we have seen a run-up in energy prices over the last few months, but this is clearly something that the U.S. government is keen to contest as we head into election season. How are your clients thinking about the energy outlook and the outlook for oil prices specifically, given the expected pressure that the U.S. government, the Biden administration, is hoping anyway to put on energy prices?
That's a great question. So the move in oil prices is especially meaningful given the resurgent strength of the U.S. dollar, right? Typically when the U.S. dollar is this strong, commodity prices, don't rally as much as they have. However, this recent surge happened primarily due to crude stocks falling at this, key storage hub in Oklahoma, and it really put pressure. Now, that being said, you have to look at how we're very cognizant that this move may be less fundamental and more momentum driven, right? So commodities, price swings in globally traded commodities like oil have strong momentums due to how they're traded, which is in the futures market. And the futures market, has a lot of embedded leverage. So investors can control a large position in a commodity with relatively small investment. So this means that speculators are playing a disproportionate role, we think, in this recent surge in prices. That being said, incumbent presidents almost never enter an election year with oil prices this high. So I can imagine that Biden is going to go to great lengths to pull out all the stops, whether it be political pressure on OPEC members like Saudi Arabia, Kuwait, and the UAE, encouraging domestic producers to produce more, or even allowing less friendly states like Russia, Iran, and Venezuela to produce more and sort of looking the other way. So I agree with you on that point.
Rami, let me ask you about how your clients are feeling about the IPO market. There's a lot of question marks as to whether the ARM IPO will, in fact, reopen the IPO market, specifically for tech, but perhaps more broadly. And the investment community from the Arab world certainly has played a major role in terms of a cornerstone investment in some of these IPOs in the past. What is the appetite like among your client base?
Yeah, I mean, I think a lot of people, they know that there's a lot of opportunity in the market. ARM's IPO was very successful, right? I mean, given the market context where rates are multiple compression, nobody can argue that it wasn't a successful IPO. It rallied 20% on its first day of trading. It then went back down. Now it has some momentum behind it. But the point is that given the context, it has been a very successful offering. That being said, the markets are still a little frothy. The reason why is because there's been multiple compressions. So why would you list into a market where, money isn't cheap? It's just leaving, equity on the table, so to say. That being said, I think that in the region, their cost of capital is significantly lower than it is in other developed markets because of the resurgent, energy prices, which means they're more willing to be patient. So I think that, when you have surplus liquidity, you can look out in terms of your duration. So I think that, this ARM IPO is the beginning of some green shoots within the IPO market. And I think next year should be a better year for listings.
So